Today I'm going to explain something that most personal finance and investing YouTubers don't want you to know, and that's that you're probably better off not watching our videos. I started this channel over 2 years ago with the goal of first learning how to invest my own money and then documenting and sharing my experience along the way. I knew nothing about investing besides the fact that I should be doing it, and the more money I put away, the better chances I had of reaching financial freedom. So I committed to doing weekly videos and threw myself into investment research. But now, 2 years and over 120 videos later, I've realized that my investment returns would have been much better off if I walked away from this channel after video number 3. And unless you've been learning what not to do from my channel, the same might be true for you. Whether you're a creator or a viewer in the finance YouTube space, as I recap my YouTube career in this video, I think you'll recognize that there are a lot of things that go on behind the scenes that can be quite harmful to our financial habits as a whole. Although I don't think anyone intentionally sets out to scam viewers or lead people astray, I feel like it's an unavoidable effect of creating investing content on YouTube. Ultimately, I've realized that creating content has cost me time, money, and happiness that would have been better spent elsewhere. And I could say the same about watching most other investing content too. So in an effort to live a happier, more balanced, and more financially sound life, here's why I think most investing YouTube channels are a scam, even my own. From the beginning of this channel, I planned to learn as much as I could and then create videos about what I was doing with my finances. This started off great as I learned about basic portfolio allocation strategies, stock valuation metrics, and different investing strategies like dividend investing. Through these videos, I built some really good foundational knowledge as I jumped into the investing world, and my primary motivation was still to learn and share information. I knew I would eventually make money on the channel, but since I had to hit various milestones to make that happen, I was only focused on making the best content I could to build a following. As I dove deeper into dividend investing strategies and topics, I eventually came across the Q Yield ETF, a covered call ETF that sells covered calls on the NASDAQ 100, historically generating a double-digit dividend yield for investors paid monthly. To my surprise, the video ended up getting over 200,000 views and earning over $3,000, most of which happened in the very first month. This was super exciting because my subscribers were growing quickly and I was getting a taste of what kind of income could be possible on YouTube. But that's where things started getting messy. I continued to make covered call ETF videos as subscribers kept requesting them. They did well and made decent money, but I didn't even follow dividend investing anymore. I was putting in hours every week researching these products, but I was getting nothing out of them myself. I felt like I had to continue making them to satisfy my audience, continue growing, and continue making money, which is not where I wanted to be. So I made the deliberate choice to pivot to other topics, but I felt the struggles immediately. People only wanted dividend investing from me to that point, so anytime I mentioned growth stocks, credit cards, crypto, or side hustles, people weren't really interested or were usually just outright rude. I was trying to do topics that I was happy with and interested in personally, but it sucked seeing the backlash of lower views, subscribers, and revenue. Eventually, I made a video about crypto interest accounts. At the time, I was starting to average into Bitcoin and wanted to hold it somewhere I would earn the highest interest on it. I tried several of the biggest platforms in the crypto yield space and found Celsius Network to be my favorite, and you probably know how that ended. But then that video started generating some serious revenue. Not from views necessarily, but from referral bonuses since I included my referral link below the video. This was cool because I realized I could actually make a decent income from my videos without needing to get hundreds or thousands of views, or appealing to all of my subscribers who initially followed me for dividend investing content. Over the following months, I still couldn't get my videos to do as well as the previous dividend-related topics. Views kept dropping, but I was still getting a decent amount of money from crypto platform referrals, usually around $1,500 per month, which I was happy collecting for the work I put into my videos. Still, after doing videos for well over a year at this point, I had several waves of burnout where I just didn't have anything to share in a video that week. Instead of taking time off, since I committed to doing 1 video per week when I started, I just made more videos recommending platforms and services with affiliate links so that I could continue earning money from YouTube. So somewhere along the way, I lost focus on the educational part of this channel and only looked at it through the lens of financial opportunity. I grew especially burnt out because I was also doing 2 or 3 other side hustles alongside it, all on top of my full-time job. So this YouTube channel became something that I just kept alive with a weekly video, but I definitely wasn't putting in the effort that I put in towards the beginning. Once I realized I was making just as much money with a few strategic video reviews, it was tough to justify doing anything more when I had so much other stuff on my plate. Fast forward to today, Celsius was obviously a disaster, all of the investing markets are down, and my channel has seen some of the worst performance it's had since I got monetized in March 2021. I'm sure I made several wrong moves along the way, but the biggest was probably focusing only on the income generating opportunities instead of continuing to devote myself to high quality content. The problem is, after creating so many videos, I no longer feel passionately about creating these YouTube videos every week. I know I have what it takes to produce valuable, engaging videos, but if the money won't be there immediately, there's other things in my life I'm going to prioritize. Specifically my other side hustles, my full-time job, and enjoying some time not working instead of structuring my life around making money every hour of the day. Ultimately, if being a YouTube creator was my dream job and end goal, I'd find some way to make it work and keep it going. But I've realized that it's not really a passion anymore, and because of that, it doesn't make sense to continue selling out just to make a few more dollars a month. I'll be happier without the pressure of content creation on my plate every week. I've got so much respect for content creators who are able to stick this thing out for years and keep things fresh and interesting for themselves. But I've recently accepted that I'm not one of them, and that's okay with me. Now, the struggle of content creation might have been made a little bit easier if it led me to outperforming the investment returns of the market, but it hasn't. In fact, I think just about every investment product or strategy I've covered on the channel has failed to match the market returns and/or has gone horribly negative. While part of the problem is that I was making investing content through the stock and crypto market peaks, I think this would have happened even in a steady bull market. All the data shows that hedge funds and stock pickers are nearly guaranteed to underperform over the long term compared to standard index fund strategies. I don't know why I thought I would be any different, but clearly the average YouTuber cannot outsmart the market. Let's recap some of the investments I covered on the channel and subsequently invested in myself. First, I was obsessed with dividend investing because I wanted passive income. I was chasing high-yield investments in risky dividend stock categories, like business development companies, or BDCs, and master limited partnerships, or MLPs. Ultimately, I realized dividends are pretty tax inefficient, and most of the investments I was looking into would have failed to match the market after considering those taxes. So I switched to growth stocks at that point, and then things got even worse. This started with a renewable energy ETF analysis, where I selected Invesco's Clean Energy ETF, PBW, as my favorite, which is now down about 20% since posting. Then, an analysis of ARK Invest's flagship fund and the NASDAQ 100, or triple Qs. I liked ARK, and I bought in just months before the top, and it's down over 60% since then. I got even riskier when I started moving into SPACs, or special purpose acquisition companies, beginning with Weedmaps, which is down about 75% since posting. Next was AirSail Corp, which is actually up about 20% since posting, and that's one of my few winners, but of course I didn't hold it long enough to profit. Next was one of my favorites, STEM, now down about 60% since posting. I still hold a ton of shares of this one in my Roth IRA and probably will for a while. Next is Volta, an electric vehicle charging station stock, down about 80% since posting. Next is Lithium Chile, which is actually about the same price as it was when I posted a video about it, or maybe about a 10 or 15% gain or so. I still hold a ton of shares of this one too, and I'm stubborn enough to think I'll still see decent returns here. I actually traded this one a bit, and that surprisingly worked out because the highs and lows have been so extreme. I never bought the covered call ETFs I covered, like QYield, NuSea, and JEPI, since they were after my dividend investing phase. But they're all underperforming the indexes they're modeled around, so it wouldn't have worked out anyway. I moved on to crypto when Bitcoin had fallen from its all-time high and started to look attractive to me again. It wasn't long before I got greedy and started looking into altcoins when I covered projects like SifChain, down over 90% since I posted about it. I also did a video on Juno, down over 80% since posting. I even got tempted by NFTs and bought a few Soulflowers NFTs on the Solana network, which have fallen quite a bit by both their Solana valuation and their USD valuations. Of course, the biggest loss here is the fact that I was a huge fan of Celsius Network and spoke highly of their platform in several videos. This was made much easier by the fact that they paid a very generous $50 reward for every user referred to the platform. If you are lucky enough to have not participated or heard about the situation, they are a crypto yield platform that paid out weekly interest if you let them hold your crypto. As it turns out, they were taking massive undisclosed risks and have since filed for bankruptcy. Whether users will get all or any of their funds back is a huge mystery, making this one of the biggest lessons in crypto custody that I had to learn. Now, some of these losses are because we're now in a bear market, and maybe they'll bounce back and look like great long-term holds in a few years. But that's certainly not guaranteed. And meanwhile, someone who ignored all of this noise and just dollar cost averaged into index funds and Bitcoin alone would be doing far better than me across the board. It's not like I set out to pick losing stocks and strategies, but again, it was foolish to try to beat the market. I made this worse by focusing on high-risk investments because I was greedy for higher returns, despite knowing deep down that the returns of the market are good enough for me to meet my investment goals. If I didn't get distracted by these extreme strategies and investments, I'd be much wealthier today, and I wouldn't have wasted hours and hours of my time looking into them. But on YouTube, almost every single video about investing is a distraction. Anything that gets you to watch the market, ask yourself whether you should change your strategy, alter your portfolio, or buy or sell any differently than usual could have adverse effects on your portfolio. At the end of the day, any content that isn't reiterating the simple and time-tested investing strategies could be costing you time and money, as it certainly did for me creating it. The problem is there are very few content creators out there that can make boring, rock-steady investing entertaining and attractive. Not only do content creators have to lean into other topics to get views and build a following, but also so that we can continue making content that is fresh and new for ourselves. So even now that I've fully learned my lessons from stock picking and degen crypto investing, and I know I could provide value on YouTube from these experiences, I don't think I could do it in an entertaining way week after week. Because ultimately, the information and strategies you need to know are short and sweet, and can probably be summed up in a single video, or the next section of this one. At the end of all of this, I've realized that the financial index card principle is really all I ever needed to know about finance. This comes from Harold Pollack and his book, The Index Card, which explains that everything you need to know about managing your money can fit on one side of a 4x6 index card. I did a video summarizing this idea a while back, and it still holds up, and probably will for a long time. Not that it should be too surprising, because if you look around for common financial advice, it's always these same core ideas. After running myself into the ground looking for a way to beat the market and outsmart other investors, I'm accepting that the hands-off approach is all I need to be happy and successful. This means building a simple portfolio of low-cost total market index funds. No longer am I picking individual stocks or investing in high-risk thematic ETFs. I'll use the exact same portfolio for my Roth IRA, which I'll max out every year, and my standard taxable investing account, which I'll put a slice of my side hustle earnings into every time I get paid. My one exception is including Bitcoin in my portfolios through the Grayscale Bitcoin Trust ETF, because I want some tax-free exposure to Bitcoin for retirement. For those curious, these portfolios will be 50% VTI, Vanguard's total US stock market fund, 22% VXUS, Vanguard's total international stock market fund, 13% VNQ, Vanguard's REIT index fund, and 5% VNQI, Vanguard's international REIT index fund. And finally, 10% GBTC, until a better option comes along for my tax-free Bitcoin allocation. My goal is to never look at the stock market and just dollar cost average into these portfolios for years to come. I'm taking a similar course of action with my cryptocurrency investments. I'm just going to dollar cost average into Bitcoin and ignore all other cryptocurrency projects. I ordered a cheap but safe hardware wallet from SafePal, and I will hold my coins there to keep them securely in cold storage. I will not be taking out loans, timing the market, or trading altcoins, because all of that would take away time and energy that I would rather spend elsewhere. Lately, I feel like I've figured out everything I personally need to know to live a healthy life financially, so I don't feel like I have anything left to say on YouTube. I refuse to make content that I'm not interested in or don't see value in, nor do I want to repeat the same content every week, which means that if I continued, I'd really only be doing it for the money. As mentioned, with views and revenue as low as they've been, there's really not much point in doing that, especially because I feel like I'd be searching to make anything that would get clicks and a few more dollars. This would essentially become another job for me, which I've wanted to avoid since starting the channel. I've considered hiring scriptwriters and other freelancers to keep the channel going with less work for me, but again, it seems like a lot more trouble and money than it's worth at this time. So as of this video, I'll be taking an indefinite break from creating YouTube content, unless I come across something that I think is really worth sharing. Maybe I'll come back in a few weeks, few months, few years, I don't know, but all I know is I do need a break right now. I want to give a huge thank you to anyone still watching this video, and to those of you who have followed and supported my videos throughout their many changes. The positive comments and feedback I've gotten from people along the way more than make up for the much larger volume of hate comments I've gotten, especially with the Celsius fiasco lately. So thanks to everyone who brought some rare kindness to the internet. If you want to keep up with me, I can't promise I'll be super active, but you can follow me on TikTok at tylermcmurray.youtube or at tylerperspires on Twitter, where I'll respond to DMs if you feel so inclined. A few of my videos have foreshadowed this decision and what I really should have been focusing on over the last few years, and I think those videos are still some of the best on my channel. If you're interested, check out my financial index card or my video about balancing time, money, and happiness. Stay well, and perhaps I'll see you again soon.